Hello, guys. Welcome to Saturday's streaming Saturdays. So firstly, we just want to go through what the heck has happened to Bitcoin. It's down. We know it's down. Like, help.
Yeah.
Why am I poor now? What is going on? But first things first. How are you, my friend, Senor AJ?
I am doing well, thank you. Yeah.
Yeah. What do
Yes.
you think about my little Spanish accent there, or Mexican?
It was good. Yeah, I think you should
Yeah.
be an impressionist.
Quisiera hablar muy español. Maybe we
Ah,
should make this a Spanish channel.
yeah. I would not be able to
No,
read
no. Do you know
that.
what? Like me neither. No, I get enough to kind of like try and strike up a conversation with like a Spanish person, but then you know what? Like I don't know if you've ever done this. You speak to someone in like part of their own language, and they think you speak it, and then they go on some madness, and you're like, oh, I'm a fraud. Sorry, I don't know
Yeah.
what I'm talking about.
One of my biggest pet hates is when someone is speaking to someone from another country in English, but they put
Yeah.
their accent on.
Yeah, yeah, I know. That happens so much in Dubai. Excuse me, sir. Maybe you can make this one. I'm like, you're speaking in English, mate. Like, it's going to be
Yeah.
easier to just speak English.
Yeah.
Oh, it's jokes.
Exactly.
But anyway, let's get into what's going on. So at the moment, obviously, we know crypto is down. We have a drawdown from yesterday. That drawdown is basically highest to lowest. That is what's considered a drawdown. That's around, how much is it, AJ? Like
Yeah,
8 something?
from the high yesterday to the low today is about 8.7%. 24 hours, I'm not sure what that was. I think it was 4 point
That's right.
something.
Yeah. Okay.
Mm.
So around 8%, pretty insane. We'll just say hello. Anyone who's watching, you want to say hello, I'll give you a little shout out. Jane
Yeah.
K, nice to. I don't know what. Okay, cool. I thought. Do you know what? I actually thought you were like Superman or something. Like with the picture there. I was like, okay, hello. Anyway,
Boss.
let's. Yeah. Let's get into this. Have a quick look. So this is just traditional markets, guys. It's not Bitcoin, unfortunately. But well, actually, no. I guess no. Yeah, I guess I'm going to say
We love
unfortunately.
the traditional market. We love it.
We do. Like, even though I was going to say unfortunately, like because it's red, but in fact, this is less red than Bitcoin. So maybe we should be hoping that we could be only minus 4.1. It's
Yeah.
such a we are absolute insane. We're idiots, aren't we? Why are we getting so involved in a market that goes down 5% on a daily basis? It's
This is the
absolutely
best time
insane.
to be in the market. It's the best time. It's my
It is.
favorite
It
time.
is. Yeah, it's my favorite time if you have cash, you know. But
Yeah.
you know,
Yeah.
I think I'm probably gonna start pulling my hair out soon. You see me like, you know, that guy Opie on Family Guy. I'll be a bit like him, the guy who works at Peter's Brewery. If you've watched Family Guy, if you haven't, that's gone straight over your head.
I've watched Family Guy. I do
No, wow,
watch it.
wow.
Oh yeah. I think I
Yeah,
know the one.
that guy,
He's
he's
so
got like
cute.
that one tuft of hair.
Yes. He's bald
Yeah,
and he's got the yeah. I know the
yeah,
one. He's so quick on the 07.
yeah. Anyway, let's
I
move
love
on.
the 07.
So yeah, basically Nasdaq, everything went down, and that is because we had a very hard and hawkish message from the Fed. Basically, Jerome Powell came out and he was like, "Look, you know, we're gonna keep doing Fed fate."
Get your words out. It's Saturday. It's a Saturday.
Yeah, no. Fed fund rate hikes. Try to say that 10 times over, you know. Now you can understand my pressure here. But Fed fund rate hikes, basically that is the federal funding to which it costs banks to borrow money, and obviously they then pass that on to you with a bit more interest of their own. So basically, if you want to borrow money, it's going to cost you a lot in interest, basically. So this kind of just weighed down on the Nasdaq traditional markets, and as a result, basically, if you're a company like, let's say, Uber, a big part of your expenditure is finding new ways to be better, R&D, hiring the best talent, but you have to borrow money to do that. Therefore, you're not able, well, you can borrow money, but it's going to be super expensive. So you borrow less. So you do less R&D, you do less hiring, you know, you make your company smaller. This makes the economy smaller. Jerome Powell gets happy. He's sitting there having a nice little giggle to himself because everyone is losing their job, but he's done his. in that instance. But that's kind of the overarching message, and I think that's why we're down very much, especially on the risk on assets as well. And just to recap here quickly, we can have a look. So yesterday 62, and again today 61, pretty much the same. We're looking at a 75 basis point hike. That's pretty much all I can say. That's squeezing the economy. Last week, people got excited. They were like, oh, maybe we'll actually have like a 50 basis point hike. So what do we see? We see the S&P, boom. We see Bitcoin, boom. We see NASDAQ, boom. What do we see today? AJ, what's happened to the markets?
Crashed. Completely
Depressing.
crashed.
Let's have a look at this on the old Technicalis.
Yeah, just quickly, Will says black screen.
I mean, I don't know. I hear me thinking I'm like, the CTO of Facebook or Meta. I feel like I've got this streaming thing down to a T, but I've probably messed this up royally.
Let me just pull up the screen. Adverts. Bloody hate adverts. I'll just pull up the screen so I can see.
Oh, okay. You don't hate adverts. We love adverts. So much monetization. Yeah.
It seems all right. I don't know. Yeah.
Okay. Well, look, let's jump onto your black screen and have a look at what the charts are doing. So what is this? Tell us. DXY?
DXY, correct. Yeah, this is
beautiful.
DXY. And we were looking at this resistance level here. Previously, it's previous high from back here. And we did test it as resistance, literally to the dollar. I gave you this price target on the DXY as well of $109.
We hit that. That was a great call. That was unbelievable.
And we're seeing a pretty harsh rejection from that. But as of yesterday, we did get a little pump. So you can see we came all the way down to 107.5, and that got completely bought up over the course of yesterday. And this is probably why we have seen this happen in the S&P. I do have low battery. Let me plug my laptop in quick.
Thing is, as one goes up, well, I mean, I guess that is that what's that? The law of physics. As one, I say, what's that? As if I don't have a bloody engineering degree. Law of physics. What goes up must come down. That is the kind of the key thing. And as the as the DXY goes up, this means stronger dollar, stronger faith in the overall US economy. But also, if the dollar is so strong, why not get a guaranteed 3% return every single year for the next 10 years by buying some US treasuries? And this is the mentality of an investor. So don't go to a risky asset like, the stock market, buy some treasuries and bonds, which is, it's not financial advice. I think it's ridiculous, but it is extremely safe. And if I'm managing someone else's money, they would probably be really mad at me if I didn't consider it. So that is why we see when the dollar goes up, we see the S&P come down.
Yeah. And looking at the technical side of things of the S&P, you can see that we have yesterday, the S&P is obviously closed today, but yesterday we got that massive rejection break of this support level here. So this is a major support level. Been talking about this for a while now. It's been major resistance when we were below it. Before breaking towards the downside of it, we used it as major support, and all the way back here as well, we've used it as support and slight resistance as well. So obviously this is a very crucial level, but it's a very bearish level to break down out of, and that's exactly what we have done. We have broken towards the downside. We've had that confirmed break towards the downside, and it looks very similar to something that was tweeted a while ago here, which isn't looking good. It's looking very similar to the 2008 crash. So what we have here at the top is that 2008 crash. This orange line here is a 200 MA. We got a rejection from the 200 MA in 2008, and then we came down to this support level, got a break of that support level, and then we saw that massive crash. This gray area here was a major support level previously back in 2007 and 2008. We're seeing this exact same scenario play out 2021 and 2022. So we've got this support level here. We've used it as major support over the course of 2021 and 2022. And we do have this 200 MA as well, this orange line. Now, this is not up to date. This chart isn't. But if we take a look at this chart here, and I do bring that 200 MA, what we can see perfectly here is that we are seeing the exact, I've literally drawn it out, the
That is
exact
hard.
same thing that has happened
Mm.
on this chart here. And what we can see is, as I said, this is a little bit behind this chart. It's not up to date, but we've had that rejection from the 200 MA already. So there's a 200 MA rejection right there, and we've seen the pullback. Then the next level we were looking at the price coming to was a support level here, like what happened in 2008. And that's exactly what's happened. We've come down and we tested this support level. Then the next thing we're looking for is that potential break towards the downside of the support. And that's exactly what we've seen here. So the three stages of the sort of confirmation that we are going to get this big leg down from back in 2008, we have seen again in 2022. So this
It's
isn't
like
looking good.
poetry.
It is a lot of poetry, and it's not looking good for us at all. And if we do continue to see the DXY increase in price, I have gone a little bit more in depth with the DXY, and I will just go over that quickly. But if we break this resistance here, we are most likely going to see the DXY increase even more. And if we take sort of a zoomed out perspective on the DXY, we can see that we actually broke towards the upside of this major range here. So this is on the weekly charts, and we've got to break towards the upside. The break was towards the upside here, and the technical price target is actually at approximately $117. So we could see the price come up to that point, but we do have this resistance on the shorter time frame. I only think that is going to happen if we do break above this resistance, which is around the $109 level on the 12-hour time frame. So only if we do break the resistance on this 12-hour time frame. But if
Can
we
I add
do
something
that, sorry.
Can I just quickly add something in here,
Yeah,
which is
yeah,
so looking at this, where we are, like, on the much smaller time frame, I know we want to get into the bigger, but just to give you guys another bit of confluence to agree with exactly what AJ is saying here, and what we might expect is that we do have quantitative easing.
easing.
I always say easing. QE, basically, we have QE. So what's basically going to happen is after we go through QE, you then transform into QT. What is going to happen is everyone was talking about the Fed having a $9 trillion balance sheet. This is something that we have to be very much aware of. And right now, they're beginning to sell. So they have been selling $47.5 billion worth of mortgage-backed securities and also treasury bonds. So they've already been selling 47.5 billion every single month. As of next month, September, they will up it to $90 billion worth of mortgage-backed securities and also treasuries are going to be sold every single month. So this, I think, again, will probably bring a little bit of tightening to the economy. I think we will probably see a little bit of a stronger dollar in this case.
If that happens, we're going to see even more cash sat on the sidelines than we are already. Looking at this tweet, I've showed this before. Cash levels are at their high since 2001. Plenty of cash on the sidelines. As you can see right here, there is similar levels to the 2001, which was all the way back here. I don't think we've quite broken above it. So broken highs, above 2001. So there's going to be even more cash on the side. And that is just going to obviously increase the price.
We're just kind of waiting for that catalytic event, aren't we?
Yeah.
Because at the moment, guys, we're in a bear market. There's no way to deny it. It looks like we're probably going to see a next low, like lower low, or at least back to maybe this 104 level, or 105, whatever it is, or 100, maybe I should say. That we're looking at on the DXY. Also with Bitcoin, we're looking to come lower. The key thing that we're looking for is just really that major change, that switch where everyone suddenly becomes bullish again. But I guess it won't happen, instantly. But these are things that we should, take into account. The Fed is doing some crazy stuff. We're going to have, CPI and jobless print, and then we're also going to have what the Fed decided to do, 75 basis point hike, which is what I imagine anyway. So there are all of these different things that we have to factor in, because crypto is not an isolated market, and I think that's something that's very important to consider. Which we talk about DXY, like AJ, people must think that we're absolutely insane. Why are you telling me about the S&P 500? Why are you telling me about the DXY?
But it
I
is
don't
so important
on Bitcoin,
the crypto market. It's
Yeah.
so important, and
Is
everyone
that
gets,
overall like the investor sentiment? I think is the key word, because as an investor, you have
exactly.
to follow the trend.
Yeah, and everyone within the crypto market needs to also follow the stock market and the DXY, and if they don't, then it's quite silly, personally.
Leaving money on the table.
Exactly, yeah, and just even looking at this DXY, we know, I've lined this up before. I won't do it now because I don't have it all set up. But what we've seen is when the DXY tops out here, we do see a pullback, and we see crypto absolutely pump. When we see the DXY bottom out here, we see Bitcoin top out, and then we see the DXY pump, and we see Bitcoin dump. And it happened here again. So DXY tops out, Bitcoin bottoms out, DXY comes down, Bitcoin pumps, and then the DXY.
This is perfect because that's like the early stage of this year. That's when we know we had the 60K, and then we had a bit of a drop down, which is where you see that little like double bottom almost. 60K had a bit of a drop, and then boom, back up to 69, and then we start falling down. And guess what happens to DXY? It goes up. Quick question, AJ.
So I don't know if you want me to answer that or not.
No. I thought we were like, that couple that finish each other's sentence.
Not at that stage yet.
Jesus, I'll send you a Bitcoin. Maybe that will help.
Yeah.
Charlie Thompson said, "Do you think there is a max on interest rate hikes before it becomes unaffordable for their national department?" Look, Charlie, one thing that I think is quite important is to realize that back in the 70s, we had someone called Paul Volcker. You can search up his name, see what he did. He kind of screwed up the economy, but also got it under his control at the same time. Basically, what happened was inflation was running at double digits. Let's say inflation. I'm gonna mix up some numbers, but I think inflation was around about 16%. So Paul Volcker just said, look, we're going from 0, we're going straight up to 20%. Let's go from a federal funds rate right now. You're talking about a 3.75. He just upped it to 20, and he kept it there for 10 years. And he said, look, until inflation comes down, I'm going to keep this at this level for as long as is needed. So it kind of fluctuated from like 20 to 16 in that region for the period of 10 years, which is absolutely insane. Imagine if, Jerome Powell came out and just said, look, inflation's what? 9. Okay, let's make the Fed funds rate 9. That would destroy the markets. So I think Jerome...
crazy time as well.
Yeah, exactly. I mean, that would literally kill everything, every asset, and so maybe not gold, perhaps, but separate thing. We're not interested in that. We're interested in digital gold. I want my fake money, fake online money to be the star of the show. But the bottom line is, so it has been done in the past. He did mention Paul Volcker recently, and I think what we're trying to get to, good point, Charlie. National debt has never been this high, which is absolutely true. But even at the time then, the national debt had probably never been that high either. I'm not 100% sure on that, but, knowing the curve of it just continuously going up. So I think, for like 3.75, I think that's actually okay. I think even 4%, because at the end of the day, their national debt, yes, they're in debt, but they can continue raising the ceiling. The US has something called a debt ceiling, and I think it's every 6 months, they have to come back and review it. Recently, they were in jeopardy of defaulting on their debt because they have a debt ceiling, which means they can't print any more money, than a certain amount. But every time they get close to a default, they just raise that and they say, all right, well, let's just pump it up by 500 billion. Let's just add on an extra amount as to how much we're allowed to print and therefore be in debt. So that's something that I think should be heard of. But I think they're probably going to end up, Charlie, around about that 3.75, maybe that 4. I'm going to put my price in between 3.5 to 4% as the Fed fund rate by the end of the year. That's where I'm going to place myself. And we can come back and review that in December, but I'm pretty confident, I would say, in that being the end. But bear in mind, where are we at the moment? Let me just, I'll show my screen quickly. Where are we? I don't know why it's taking me so long here. So we're at 3.25. Well, no, we will be at 3.25. So from here, this is what I think is going to happen. This being the maximum, because basically they say, look, it's in between 3 and 3.25. And I think the market, the only reason why I'm saying this, guys, is because I think the market agrees with me. So 3.25, 75 basis point hike, bomb. This is going to bring us to 3.25. 50 basis point hike in November, that's going to bring us to 3.75. 25 basis point hike is going to bring us to here. This is what I genuinely think is going to happen. This would lead us to a bit of a rally, having no basis point hike. But what Jerome Powell said the other day was, look, guys, we need to get on top of inflation. And that's going to be, it's better to over tighten in a shorter period of term and keep it elevated as opposed to under tighten and essentially have nobody believe that you're good at your job, which is kind of like where I think that's going to go. But yeah, so yeah, but Charlie, he is absolutely correct. Yeah, national debt has never been this high before. But the thing is, it just keeps climbing, and as long as you're the world reserve currency, you can continue to sell debt to governments, to people in your country, to anyone, as long as you can print the money to pay them back. It is a bit more complicated than that, and I appreciate that, but that is essentially it. Like, I can keep selling you shares of my company as long as I can keep making more shares of my company, But anyway, should we have a look at Bitcoin and how this whole thing is kind of affecting the price of our dear baby?
Yeah. I'll just quickly summarize what I was going to say on the DXY. So quickly,
sorry, man, I cut you up. That's
all right. There was a question. So if we do break towards the upside of this resistance, then I think there is more highs for the DXY. So I'd be looking at 112 as the next target if we break this resistance, because previously if we go all the way back here, it's been a major support level here, major resistance here, major resistance here. I don't know if it dates back even further. Yeah, so even further as well. It's been sort of support and resistance level as well. So that is the next weekly level that I'm looking at the price coming up to if we do break this resistance on that shorter time frame. And then if we break that, then I think the $120 level will be that next target. Only if we break the $112 level, we'll come up to the $120 level, because also looking back, that has been a major resistance as well. So I'd be looking at the DXY coming up to there, and almost definitely, if we did see the DXY continue to come up to there, we would see the traditional market and the crypto market have an even bigger pullback, maybe all the way down to sort of that 10K, 12K target that a lot of people are talking about. Even we are having that 12K target sort of sat on the side of the table. So yeah, taking a look at.
Can I just if you quickly go back onto the DXY?
Yeah.
Just bring us back to 1980, 1970, something like this, because I know you said, look, we have, even you go historically there, bomb, key levels, keep going left, yeah. Back. Okay, so here, just want to kind of let you know, so this is between 1982, as you see on the screen, right up to like 87. That's where we had that crazy high level. Just to let you guys know, a little bit of history. Paul Volcker, as I mentioned before, he was the Federal Reserve Chair from 1979 to 1987. So basically, what's happened, that this is during his tenure as the chair of the Federal Reserve, and this is where he had inflation extremely high. So you can just see the correlation that we see between Paul Volcker being the chair of the Federal Reserve and raising interest rates to crazy high levels. And let's bring us back to this DXY. You can see the DXY obviously went extremely high. So the higher the interest levels, the higher we see the DXY, and the lower that we see typical asset prices, which I guess is the overall reason why the markets went down this week, or I should say the other day, yesterday, because we saw, Jerome Powell being like, okay, we need to raise interest rates. History's told us whenever that happens, assets go down. So your price targets here, AJ, are spot on.
Yeah.
Absolutely beautiful.
Yeah, I would be expecting those, but obviously only if we break above the price targets below them, because
Yes.
they are major resistance. But yeah,
We are at
taking
levels.
taking a look at Bitcoin, we can see that we've had this confirmed rejection now. So we've spent around 5-6 days within this resistance level here. Bitcoin did absolutely bugger all. And it was trading within a range of around $1,000. That was it over sort of the course of, what's that, 5 days. Yeah, 5 days. And then on the 6th day, we finally broke that $1,000 range that we were trading within. So that was between $20,900 and $21,900. That was a range that we were trading in for 5 consecutive days. And then on the 6th day, we finally broke that range, and we broke it towards the downside, getting a rejection from this major resistance level here. Not looking too good. It isn't a very bullish sign that we are seeing this rejection. And I do anticipate that we are going to see the price come down to 19,000 in the coming days, in the coming weeks. But I do think maybe a little push before the next pullback is something that is needed, and I'll go on to why. But yeah, this is very bearish that we've seen a rejection from this resistance. It's been major support, major resistance previously. So this is why I was talking about this level being such a strong and important level that we needed to break above to be bullish, or if we wanted that confirmation to be bearish, we needed to get a rejection, and that's what we got. Zooming into sort of the lower time frames, let's have a look at is it a 12-hour? There is a bullish divergence, and that is there's one on the 12-hour that's not confirmed yet, but let's have a look. Let's have a look at the 4-hour then. So on the 4-hour, we are actually seeing a slight bullish divergence in place. So we're getting those lower lows on the price action chart. Then if we bring up the RSI, you can see we are getting those that momentum towards the upside, those higher highs on the RSI, and the stochastic RSI is in extremely oversold territory. So maybe in the shorter term, on the shorter time frames, are telling us that we could see a little push towards the upside. So maybe over the course of the weekend, we could see a little push towards the upside before having that next pullback towards the downside, which I do anticipate. I do think we are going to come down to 19,000. Why? Because we got a rejection from this resistance, and the next major support is at 19,000, but also this price target of this rising wedge pattern here. So we've got the rising wedge here that broke towards the downside, and we also have the bearish flag here, which broke towards the downside. And yeah, that price target for the rising wedge is at approximately 19,000. The price target for this bearish flag is actually at $18,800. So we will most likely see that price target be hit as well, because we did actually break towards the downside here of that bearish flag. Going back to the daily chart, there is major support, as I said, on the $19,000 level. As you can see back here, major support. So if we do come down to that level, which I do anticipate we will, then there is going to be a lot of support at those levels. If we do break that level, I do think $12,000 is a pretty realistic target, because remember, we do have this bearish flag on the daily chart. We have broken support on the RSI, and we've seen this twice previously. When we've broken support on RSI and then broken the support of the bearish flag, we see that massive leg down, and that's happened twice before. I've showed you this multiple times, so this is exactly what we could be seeing. And the only thing that could stop us from doing this right now is that support at 19,000. So if we can hold that support, then great, and get a nice bounce, we can come up and test this resistance. But if we do break that support, then I'm going to most likely confirm 12,000 is that next realistic target.
Nice. There we go. That's the thing. We're worried. Are we going to hit that 12K?
Yeah. It's looking very realistic at this moment in time, and especially if we do break those resistance levels on the DXY, if we do come up to 100, 112, we could be at 16,000, 15,000. If we come all the way up to 120, that could take us down to 10,000, 12,000 vicinity. So
no, you're right. But one thing I have said is, like, I don't think that we will see, personally, could be wrong. Don't sue me if I am or am not. But I don't think we're going to see 10K. You know, I know looking at institutional buying orders, there is a lot of interest at that 10K level, like the most interest. There's more interest at 10K than there is at, 11, 12, 15, whatever. But I think we're probably, because of the way in which Bitcoin has kind of evolved and, the attraction it's brought, I think, if we do see another leg to the downside, which technically does look pretty likely, as you just said there, AJ.
Yeah.
I think we'll probably top out, well, maybe bottom out is probably a better word, at that maybe 13K, I think below 15 is actually not a crazy idea. But I think, maybe that like 12, 13K level, maybe a wick down somewhere. But I'm going to say, that would probably, for me anyway, just because of, I think the amount of people, you, me, everybody on this stream, everybody on any stream, anyone who's actually into crypto, if there's a chance of you buying Bitcoin below 15K, you best believe everyone's getting into it.
Yeah, definitely. There is going to be a lot of buying pressure if we do go down to those levels. But for me, 12,000 is realistic only if we break 19,000. For me, I don't think we're going to go down to 12,000. Well, we're not going to go down to 12,000 if we don't break this support at 19,000.
That is true. And that is a strong support.
Yeah, it's very strong support. If we do break that, though, then I am going to say 12,000 is that next target. 10,000, there is talk about 10,000. Now, the only way and the only thing that I'm looking at that could signal to me that 10,000 is a realistic target is looking at the percentage pullback from the previous bear markets, from the all-time high to the low. That was around 84%. If we do that from the high, the previous bull market's high, all the way down to around 84%, that takes us to just under 11,000. And the one before that, so the 2015 bear markets, that was actually an 86% pullback. So if we saw an 86% pullback, we could see Bitcoin down at around $10,000, maybe even below it. So that's the only realistic way I could see Bitcoin going down to 10,000 if we did continue to have those 80+% pullbacks. But as Ben said, there's a lot of there's indicators. We got that CVDD. I've showed that multiple times. That's sitting at $15,600. Yeah, that's going to be major support, that level as well. But even just below the $12,000 level, so the $11,500 level, as you can see, I've just drawn that on the screen here. This blue level here has been major resistance previously. So you see resistance here before breaking towards the upside. We got two rejections here, and after breaking towards the downside, we got a rejection. We got a retest and then a rejection. So it's been major resistance. So it is going to act as major support, this level here, which is sat between the $11,400 level approximately and the $12,000 level. So that is going to be major support. Maybe we could see a wick to 10,000. That is something that is a possibility. But there is major support at this sort of approximately $12,000 level, $11,700 level. There's major support there because there's been so much resistance previously. So if we did break that support at 19,000 and that $12,000 target was confirmed, if we do break that $19,000 level, then I do think we would be held up by this support here. I wouldn't see a break towards the downside. The only thing that I could see is a wick to 10,000, and that would give us that sort of 86% drawdown from the previous all-time high. So that's the only scenario that I could see us actually coming down to 10,000. I don't see us breaking below or getting a candle break below $11,400. I just don't see that because of this major support level.
I agree with you. No, I absolutely agree. It just seems like a bit,
I'm not going to wipe 10,000 off.
A lot would have to go wrong. I will say a lot would have to go wrong. In order, but then again, the thing is that there is zero interest from institutions below 10K. If you look at the futures data, there is no interest. And we even saw it ourselves, didn't we, AJ? Like it kind of made like a Christmas tree. It basically went like dun 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 dun. I feel like I'm making a game show theme tune, but this was the bottom at 10K, but it literally went to zero because like the size of this way, the size of the interest is basically the length of the bar, and the length of the bar got bigger towards 10K, but it shrunk to zero straight away. If it's below 10K, it's pretty much a failed asset. I think might be what the investors, the big institutional, etc., are thinking. Because if it goes below that, it might be game over for a lot of people. Confidence will be knocked. That's the key thing. Confidence in there.
Yeah, definitely. And to add on to that, that's why I think there could be a wick to 10,000. Just all those buy orders down there
almost
by
like a
big
shakeout,
institutions. If the price does come down to 10,000, I think it will be bought up very, very quickly by those institutions, by those buy orders. So that's why I think it would only be a wick down. And then it get bought up back to 12,000, find support at 12,000, and then off we go to the races. Hopefully, bull market starts. But yeah, obviously, this $12,000 target is not confirmed yet. It's only confirmed if we break below 19,000. Just to go over that again quickly, this support level here, 19,000. It's only confirmed if we break 19,000. So we're not saying that it's going down, most definitely going down to 12,000. But what I'm saying is only if it breaks 19,000, this major support level here, that's the only way that we could see the price come down to 12,000.
AJ,
what
color is it going to be?
What color? What color?
Your Lambo.
Oh,
Red Lambo, AJ. Red Lambo.
I'm not sure if I want a Lamborghini. I think they're too common. I think.
Oh. Okay. Quick question, guys. Drop a comment. What would be your favorite supercar if you could choose one, or just doesn't have to be a car, maybe a motorbike.
Yeah,
I'm big into motorbikes. In fact, like behind my screen, I have a picture of me on a motorbike. Maybe a bit vain, but it's a really cool, really cool picture. Me at a racetrack. But like AJ, are you more like an Aston Martin, kind of like slightly like classy, discreet? What's your what would be your choice?
I like an Aston Martin. Not a lot of people go for Aston Martin. Conan's eggs. I love a good Conan's egg. They're my favorite. They've got to be.
Would you get the 4-seat one, the Agera? Is it the Agera?
No, it's the Gamera.
May have.
Yeah. I'd have that as a family car. If I had a family, I'd use that as my daily driver.
As your daily, I said a daily driver on a Koenig's egg.
Imagine saying that. I would love to be able to.
What do you drop your kids off in school in? Koenig's egg.
How'd you get all the kids in about? Oh, it's a 4-seater.
Yeah, don't worry. Perfect. Picture perfect family. Do you know? Yeah, but I think I'd probably go for like some. Do you know what? I think I'd go for like a semi-fast bike, but then I'd go for like a fast car. Because a semi-fast bike is also probably as fast as a fast car.
Yeah.
Like I had a bike when I was 20 years old, and it was doing 0 to 60 in like 3.1 seconds.
Wow.
It's disgustingly fast.
My car does it in 13.
What car do you have?
I've got a Polo, VW Polo.
Oh, nice.
It's a nice car. It's just a 1 liter, so it's good. Good for fuel. That's why I've got it.
Good for fuel. Yeah. Save on fuel. Buy more Bitcoin.
Exactly. That's exactly my.
That's exactly it. Yeah. I spent all my money on bloody petrol doing wheelies at 70 miles an hour.
Yeah.
Idiot.
Exactly.
Be more
Charlie
like
Charlie
Ape.
says, I already have it, a VW Beetle. If it's one of the old ones, then I respect
That is
that.
cool.
I
That is
quite like them.
cool.
Yeah.
Yeah.
But if it's one of
That-
the newer ones, then no. The old
I
ones
feel
are actually
like the
quite
newer ones have
nice.
become
Classic.
almost like a girl's car.
Yeah, they have, haven't they?
To put a
You see,
stereotype on it, which we don't believe in, we don't believe in any stereotypes, but we know that other people do. So I would put that as my little, like, the asterisk in the T's and C's,
you
An old
always
one.
see a
Hey,
picture.
he's come through. He's
You've
come
got an
through.
old one, yes. Okay, I respect that.
Get up there,
I think
Charlie.
they're quite cool. I do think they're quite
Yes.
cool.
Yeah, they are. Is it called Herbie? That's what I want to know.
Yeah, I used to
Yeah.
love that.
Yeah, that was classic.
Mm.
Good. Anyway, so look, bottom line, guys, is we will keep you up to date throughout this week.
Yeah.
Should I just have let me just quickly bring up my one of numerous different tabs.
What, you're
Of
showing
which I
us
have a
on, you show a
disgusting amount.
photo of you on your motorbike now.
I don't want to turn you guys on. I can't do that. Sorry. This is supposed to be a YouTube stream, right? I don't want anyone getting inappropriately excited. Me and my leathers. But let me show you what's going on for this week. So just quickly, so today, obviously 27th. On Tuesday, it's this Tuesday 30th. Just kind of count the days through. So inflation from Eurozone. Well, I say Eurozone, it's not the Eurozone, but it's Germany. But like Germany's the biggest economy in Europe. So if that's not, if that's not a good indicator, I don't know what is, right? So that's going to be affecting FX markets. If you're interested in the FX markets, such as Euro USD, Euro Pound, whatever, this is what you need to be looking out for. CB, consumer confidence, not too much of a move on the market. They're looking towards the end of the month here, so we have quite a lot going on the 31st. China, France, Germany, Eurozone, core inflation. That's going to be a big one. Italy, inflation. Oh, no, my pasta costs 10% more. What?
I've seen it, though, in supermarkets, because what I do when I go for my shop, I get the
Can you
massive...
cook?
I'll get the massive bags. Yeah, I'll have to.
You get a massive bag. What, you bring back them 5 kilo bags?
I get the 3 kg, and they used to be £2, and they've gone up to £3. I think it's £3.56 or something. A really odd number.
Wait, from £2 to £3.56. That inflation is not 8%, my friend. This is you've been mugged right off.
I'm being mugged off. I am. Yeah,
you've got inflation from both Italy and the UK, which the UK is what, like 10 point something now?
Yeah.
It's horrible.
Yeah,
all right, so
everyone, I'm getting completely mugged off here.
Should we start a Patreon for you and your pasta?
Yeah, I love that's all I eat. I can't cook anything else. I need a personal chef, but I need
no, you just need to learn how to cook.
I don't like cooking. That's the thing. I hate the washing up after.
No, mate, I don't mind cooking. I just can't wash up. Oh, I can physically. I'm able to, but I just mentally I'm not able to. But the most important thing, guys, coming out next week. So on the 2nd, which is on a Friday. First Friday of every month, it's non-farm payroll. As crypto guys, probably don't really want to hear this, don't want to think about it, but we have non-farm payrolls, which is actually quite important because this is basically how many jobs have been added to the economy. Right now, we're looking at 285 next week, 1,000. And this is not from the last week, just go with me here, right? Okay. It's basically from last month. They collect all the data, they process it, and then they give it to us. But I'm sure you guys do that anyway. So forecast is 285. If we have more than 285, this means, non-farm payrolls. So the amount of people added to the payroll is more than expected. So if we have, let's say, 300,000, it's more than expected. Why is there so many people working? We're trying to squeeze the economy. We want more people unemployed. Stop working, make the economy smaller, and have no money, please. That is the goal of the Fed, not from me. I think everybody should have a nice job. But this is where
it's a weird concept, isn't it? Very weird.
Oh, it's an extremely weird concept because it is. It's your job is to kind of squeeze the economy, make it smaller. You want unemployment. And one thing I will say, the Fed Their goal for unemployment is to be at 3.7 by the end of this year, 3.9% by the end of next year, and 4.1 by the end of 2024. So they are hoping for more unemployment, which basically means that inflation comes down in a very weird roundabout way. But as you know, inflation comes down, asset prices go up. So we're happy about Bitcoin. So
Do you know
if
what
you
they're
want
doing?
Bitcoin,
They're basically telling you to buy Bitcoin.
well, what they're saying is if you want Bitcoin to go up, and anyone who lives in the United States, you have to listen to this. If you want Bitcoin to go up, complain about everybody in every place you go. Anyone who has a job, get them fired, right?
Yeah.
Because then there'll be a higher unemployment rate. Yeah. Complain, just lie. They left their teeth inside your soup. You know, you go to a water park. Oh, he peed on me before I went down the slide. Get him fired. Your Bitcoin will go up, right? Very selfish. Not financial advice. I think I'd probably put that in there. But anyway, so bottom line, yeah. So on Friday we're going to have a lot of volatility. So just be aware of that. To the early stage of the week, not too much, maybe a little bit of strength in the dollar because we have a bit of uncertainty in the eurozone. So people, if you're uncertain about what's going to happen, you're not going to hold the asset. You just move it into the dollar, wait to see what happens, and then move it back into the euro. So you'll invest either in France, Germany, Italy, whatever. But bottom line is probably a little bit of strength in the dollar, which AJ might bring us back towards those levels of resistance we saw in the DXY, maybe even pushing us ahead. And you can kind of see that will be the effect. But then undoubtedly a little bit of sideways action, coming up to September 2nd when we have those non-farm payrolls. And that's pretty much me.
Devin made a nice comment here. Well, but that's good because it shows people are able to retire as well.
Is that what, if we pee on them when they're doing their work?
I think
you've lost me here, Devin. Do you like peeing on people? I'm joking. Anyway, we should probably stop this now, right?
Yeah.
Right. Anyway, no, guys, I hope you have a great day. Thank you for tuning in. As always, it's fantastic to have you guys here. And, lots of love to everybody who comes back day after day. We're very grateful.
Yeah, thank you very much. And make sure you keep smashing that like button. It does really help us out. Only press it once, though. Otherwise, you'll unpress it. Just smash it once.
I've been smashing our like button, and I just haven't, it just hasn't made any effect. I'm obviously doing it an even number of times. I smashed it 20 times, and I still not even got a like.
Smash it an odd number of times.
An odd number of times. That's where we go. Anyway, look, have a great day, guys. Very good to have you all here, and we will see you probably Monday. I think tomorrow. Unless there's something going on, we'll come live. We'll let you know. But as of now, there's not really too much happening. What has been decided has already happened. So I expect not really much to happen. But if there is, we'll come live. We'll let you know.
If there's any technical stuff, I can always jump on. And just very, very quickly before we go, the Ethereum trade that I actually gave you, it did hit that price target. I did say if it was going to break this support, we were going to see a pretty substantial pullback for Ethereum. It's exactly what we saw. The final price target was at $1,560. That was hit perfectly, and it's actually smashed below that target as well. So I just wanted to bring that up.
Smashed that. Did you put that out somewhere on on Twitter, shouldn't we?
I put it on it was in a video. It was in one of the lives, one of the previous lives.
Hit the bell notification. That's what you need to do. Yeah. We can't be making these great trades and have no one follow us. We did 100% last week, and then we literally called the downfall of Ethereum.
So make sure you smash that bell notification as well. But thank you very much for watching, guys, and smash the like button if you want to see more trades like that as well. And we will see you maybe tomorrow if there's anything to update you on. If there's anything happening with the technicals, I'll jump on and update you. If not, then I will see you guys on Monday.
Have a good day, guys. Thank you very much for joining. See you later.